Rivian CEO RJ Scaringe, good to see you. Congratulations on a strong quarter. Look, I've been poring over the data, right? Production jumped 50% quarter on quarter. Deliveries jumped 60% quarter on quarter. But you raised guidance by 2,000 units, which is less than 5%. Why were you not able to raise guidance to a higher degree?
Yeah, when we look at production for the full year, we're of course contemplating supply chain along with our ability to continue producing. And the adjustment on the guide, we wanted to make sure we were being very realistic and setting expectations in the right way. Of course, everything that we're doing internally is to work to beat those targets and to exceed that. And we spend a lot of time talking about that internally. But the increase in the guidance reflects the confidence we have in our continued production ramp and the health of our supply chain.
We mentioned that deliveries jumped 60% quarter on quarter, but if you go back over the last 4 quarters, production outpaces delivery by about 5,500 units. You and I have discussed this before, but at this point, is this an issue of demand, the unsold portion of production?
No, one of the challenges with where our plant is located, it's physically in the middle of the country, and there's not a lot of large markets immediately adjacent to it. And so as we're ramping, we have vehicles that are coming off the line, being produced, and then they get loaded onto rail cars, and that inserts many weeks of time between when the vehicle leaves the production plant to when the vehicle is delivered. And particularly when the production rate or the ramp is steep, you get this quarter-over-quarter delta, and over time that'll be de minimis. We won't even notice it. But given the scale of our ramp and given the overall magnitudes, it's something that you do see a little bit more of right now.
So Rivian is still supply constrained. There is no demand crunch.
Yeah, and in fact, our biggest challenge from a customer point of view is the wait times associated with the vehicle. So. This question will probably generate a bunch of customer emails to say, hey, wait a second, if there's vehicles in the system, how come I'm not getting my vehicle sooner? So, for us, it's continuing to ramp production and then taking dwell time out between what we call factory gate and delivery. And, we can do that through spending more money. We could ship vehicles with trucks. It's more expensive, it's a higher carbon footprint, but we've tried to really maintain a heavy utilization of rail, despite the fact that it does insert more dwell.
You talked a lot about, on the demand side, the SUV now being the main driver rather than the R1T pickup. You also said that the SUV is more profitable than the pickup. Can you put a number on that, on the percentage difference in terms of margin on both?
We haven't put a number to it, but you can look really clearly the pricing of the SUV is higher. So it's a $5,000 increase, essentially like for like trim, like for like package, between the R1T and the R1S, and the cost to produce them is very similar. So it is a higher margin vehicle. It's as I said in the earnings call, we're very happy to produce roughly 2/3 of our volume being R1S. That was what we'd originally expected it to be, and it's ending up very close to that. So when we planned the program years ago and we're thinking about how this would map out over time, we expected about 1/3 of the volume to be the R1T and about 2/3 to be R1S, and that's where we're landing.
You lowered your adjusted loss guidance for the year to $4.2 billion, down from $4.3 billion. Still a lot of billions, RJ. When will you raise more capital, and in what form?
We're at such an interesting and important inflection point as a business. So as you know, we launched 3 vehicles last year, the R1T, the R1S, and the EDV. And launching any vehicle and any program with this level of complexity, you have hundreds of components or hundreds of suppliers providing thousands of components on each vehicle. And so we felt the pains of not only launching a vehicle, but launching those 3 with the supply chain challenges that existed last year. And so just the lack of fixed cost absorption and the impacts of being subscale at the beginning multiplied by 3 have led to what's been, we knew going into this and we guided to this, we knew this would be a year where we'd continue to lose money, as reflected in yesterday's call. We're doing better than the original guidance, and we've re-guided because of that. But the focus of the business is incredibly dialed in on driving up production ramp and driving down cost. So that's changes we're making to the vehicle in terms of cost improvements, but also negotiations we have with our suppliers. And then, of course, continuing to ramp the plant and run the plant more efficiently. So ultimately, when we think about the path to positive gross margin, ultimately the path to profitability as a business, we have a very clear line of sight as we now have predictability in our production ramp, and we have really tight predictability around the supply chain and the contractual cost reductions that we're going to start to see. And we're already witnessing those as evidenced by the numbers we put up yesterday. So we're looking with a lot of excitement towards the next several quarters as we march and run, I should say, as fast as we can towards profitability. And that ultimately is the long-term necessity for the business, is to self-finance our growth. Now, with that said, we've been also very clear that our cash balance, and as you allude to in your question, puts us in a position to be able to focus appropriately on the long term as well. Meaning, while we're very, very focused on ramping R1 and the EDV and driving those to the normal facility to 25% gross margin, we're also developing and proceeding with the R2 program, and it's making great progress. I don't think I've been as excited as I am about R2 as I've ever been on a product, so we're looking forward to showing that. But the cash balance we've put ourselves, or the cash that we have, has put ourselves in a position to not need capital through the end of 2025.
Okay. As I always do, RJ, I told folks on social media we're going to be speaking, and there are frankly hundreds of questions. I think a big one is on Europe. You have the infrastructure to service the Amazon EDV. Does that mean you can now start shipping R1 to Europe because that infrastructure is in place?
Yeah, this is a great question. We get asked this a lot by customers, and I have some friends in Europe, so we get asked a lot of different questions in and around this, country by country. Right now, as you alluded to, or as you said, we are delivering vans in Europe. We have a service infrastructure and parts distribution capability that's been set up there. It's a great way to establish the operational footprint there with a single customer that's, of course, very operationally focused. Today, we're focused in the immediate term on continuing to ramp sales and deliveries in North America. We have so much demand backlog. We have so many customers that very much are looking forward to their vehicles. That is the focus. And when we think about really going heavily into Europe, the R2 program and that platform contemplates really a significant market entry, and we think a really nice market fit. So that's something that over the next few years will become a really important market for us.
You've talked a lot about trying to get out of the exclusivity agreement with Amazon. The other big question that your Rivian followers have is what type of deal would you do next? Would you go for the big fleet operators like UPS or FedEx, or will you try to do many different deals with smaller mom and pop shops, smaller fleet operators?
Yeah, I think ultimately it's going to be, there's elements of both. When we set out to develop the van, the number one sort of focus point was looking at how can we make working and using this vehicle the ultimate environment. So easy to get in and out of, easy to load packages into, the way we design the closures in the vehicle, facilitate that. And of course, very safe. So the safety levels in terms of visibility, in terms of crash performance are exceptional for the segment. And so as a result, what we're seeing is a vehicle that we really believe is the ultimate architecture and ultimate van when it comes to deliveries and when it comes to that type of commercial operation. And we're seeing a broad spectrum of use cases from pure last mile delivery to more of a commercial van application. And so we're navigating that as we speak in terms of selecting, following our Amazon relationship, what are the next big customers, and then how do those sequence in together? And a lot of it ties to use case and trying to minimize the amount of complexity we add to the business by having similar use cases with the immediate follow-on customers. And then over time, we'll broaden the use cases, of course, as a platform and as an architecture, what we call the Rivian Commercial Van Platform. It's designed long-term to cover a very broad spectrum of use cases.
RJ, you lowered capital expenditures guidance for the year. Does that impact the timeline for Georgia because you're deferring or delaying some expense to next year? Essentially, the question is Georgia on track with the original timeline, and is R2 on track with the original timeline?
Yeah. So Georgia, we're about 80% complete on all the grading work on the site, and it's a big site. It's roughly 2,000 acre site, and as that site's coming together, it's not as if things happen sequentially where we grade the site, we build the plant, then we order equipment. In parallel to everything that's happening in terms of site prep and soon construction, all the long lead items, paint shop, body shop, stamping operation, those will be kicked off in parallel. And a number of those activities have already been initiated with work well underway. So timing-wise for the R2 plant, it's on track. And then the R2 program, this is a significant focus for the business. I'm trying hard to contain my excitement for the program until we show it, but this is something that we're not only excited about, but is on track and is really foundational to us dramatically increasing the addressable market for us as a business, and therefore the sort of relevance and relatability of the brand in terms of price point.
RJ Scaringe, Rivian CEO on the second quarter earnings. Thank you very much for your time.